Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show. This is episode 177. Today is March 28th. AJ is back in the, I don't know what you call it, but your space station, your trading station, your central command center. AJ, how you doing today?
I'm doing well. I'm getting gigged back up for, gosh, look at today's trading session. I don't know what to make of it.
The first thing I thought was, can Michigan confidence really drop the market 2%? Because I rarely think that that's one of those economic pieces that's like, hey, let's tank 2%. What are you thinking?
I think it's more of the personal income and outlays that was released today.
And what was the feedback there?
That inflation is getting a little bit out of control.
I see the S&P hitting 5,600 here, 200 lower than that mark that we discussed a while back.
Should we jump into the charts?
I
Because
feel like the VIX trade is back on. I feel like we thought we were in a
VIX
rally,
trade
but
is
we're not.
absolutely back on. People should be placing that VIX trade and following it through. Maybe having the VIX trade only go a week or two using weekly options, or if you want to go out to April 17th, that's fine too. But the VIX trade's definitely on. But let's look at the charts before we even get into the news.
Yeah, I'm not seeing your correct screen
Oh,
load in.
yeah. Let me see if I can't get that up. Give me 1 second, and then I'll share. I played around
Otherwise,
when you weren't looking, Sip.
yeah, I have some charts, but they're just more of the generic ones. The VIX is up 11% today. So, hey, VIX trade back on. Now we've got your screens back, and we're looking at a pullback.
Yeah. Well, okay. So where were we last week? I want to make sure everybody understands where we were last week. So last week, we weren't sure about this reversal over here. I actually have my marker up today. I'm going to see if it works for us without messing up my camera. So yeah, this was what we were questioning because we look at these reversals and we want to make sure we get a good confirmation. Like the confirmation we use is this blue line above this pink line. And it was kind of just loitering. The blue line was just loitering around the pink line. Finally, I believed it, right? We started to go up earlier this week, and I was like, all right, that's true. I locked it in, right? That's our bottom. So I was already using it as a bottom, but I was getting ready to back up and say maybe we didn't get a bottom. But once we got that move up, I was like, yeah, that's our bottom. So then I started looking for our top. And I just want to refresh everybody's memory for what we talked about last week. What we talked about last week is if that bottom confirmed, then we would look at where the next top was. And if that top fell in this magenta zone, and as you can see, it very much did, then the last piece of the puzzle we were looking for was, would we start trading below $5,521.52, our last low close, the close of that reversal that we identified right here. So yeah, it's all stacking up. And what does that mean? That means that here at Trading Trainer, we're not just going to say that we had just a random down move and the rest could be easy. We're going to say that we're in a confirmed downtrend, which means we should start trading downtrending strategies, trend following strategies in the down direction, swing trading in the down direction. So when we spoke last Friday, Sip, we were basically saying, hey, we don't even know if one of these three criteria have been met. Now we feel like two of the three criteria have been confidently met. And so the last criteria is, will we get below $5,521.52?
And like the more and more that we go through these pop-ups and these pullbacks, I feel like the days of the week are important, because whenever we jump on this show on a Friday and some news comes out, we're pulling back, and then I'm looking at the week we had a gap open on Monday. Like, it seems like we head through the weekend, there's some good tariff news, so like the market props itself up on Monday, maybe we get some news on Tuesday, and then by the end of the week, Friday, the sellers kick back in. Was any of that economically driven throughout the week to start the week more optimistic than we are now? Because we're definitely pulling back much quicker than we were, ripping to the upside.
Yeah. So the beginning of the week, this time period is so news headline driven, which, by the way, drives investors crazy, right? Because investors want to be able to invest in the long term. And if we don't know what's coming out, literally not even in the next year, but in the next days, you can't invest in the long term. And so that drives a lot of investors crazy. So beginning of the week, we had news headlines that said, hey, maybe there's going to be a calm in tariffs. Like maybe some of the biggest industries are going to be, forgiven or left alone, like the auto industry and pharmaceuticals. And then by Wednesday, where you can see we started to get another downturn, we got a news headline that said, no, all of those industries are still very much up for grabs. Just stay tuned. And so, yeah, as soon as that came back into the market, and then today, the nail in the coffin is simply that, nothing is going to be off the table. And so inflation is starting to rise. Monetary policy is starting to be affected. Look, I even have over here, if I bring us back to our economic calendar, let's see if I can pull this up. Remember, we were talking about how the Federal Reserve said it was going to slow down quantitative tightening. Well, sure enough, quantitative tightening has been all but stopped. So the Federal Reserve is worried about a recession. They're proactively, instead of reactively, they're proactively trying to take steps to curb a recession. But it looks like, we're on that way. I have one more view for you, Sip.
Let's do it.
The last week, we also were saying to everybody that our downtrend, or this move down, was immature, right? Because in order for us to start to believe in a maturity of a trend direction, we need at least two tests of support and two tests of resistance, basically two bottom reversals and two top reversals. Well, now with the March 25 top being defined, we have that. We have a mature downtrend. You can see my channel lines here. And so, yeah, everything's in place for us to really, as an economy, start seeing a pullback. And like I said, if we go lower than our close on March 13th, then it's all hands off. I'm going to start jumping on board with doing some downtrending strategies.
And in the short term, is that 5,600 mark, or if we close below that, could that be like the first level or the first sign of getting to that 50? What'd you say, 55.21?
Yeah, I don't even think 5,600 is a psychological level. I mean, of course, round numbers are psychological levels. But I think that this low close here of 55.21, if you want to round it 55.20 or 55.25, We go down about another 80 points from where we are right now in the S&P 500, and it's no holds bar. I think you're going to see a lot of more selling. People are going to, it's going to be a circle that keeps, chicken in the egg. We're going to start seeing a downward spiral.
And so you had mentioned that if we get down here, we hold, you're going to start to look for more short side strategies. Does that mean that during this week, you put that VIX trade back on because
Yeah.
it start to have like the uncertainty kind of relax? Was that kind of your opportunity to say, hey, maybe I should put this back on? Because I know you had, got out of it before it topped out. And we talked about how you're going to always continue to be looking to put it back on.
Always put it on at a bottom. Here, let me show you my indicators. So this is those free indicators, SIP, that I give people. They can just go sign up and be part of our web portal, and they can download these indicators. You'll notice that indicator is appearing today. We had some of our other indicators kick in as early as Wednesday. And so we were placing our trade yesterday and have it in place. So we're set. We're collared from 16 down to 15. And I believe the offset was 21 to 22. So we go above 22. And again, it's going to be a big return for us.
Yeah, and today seems like that first leg, and the way that these are kind of, when we look at the gap between this and the high and the S&P and the low, they're almost like close correlated, in that if we do break that low, like you mentioned, this S&P's or this VIX could get back to those 28s, because I would imagine breaking that low would create a lot of uncertainty and scrambling and options, selling. So how long is your timetable for this?
Next week. I got to show you one more thing. I got to show you how uncertain. So this is the PC. I've been trying. This came out early this morning. I've been, this is for February, by the way. So we started to have some of these things happen in February. I would expect next month's PCE to be more accurate of what's going on, but you can see that inflation is jumping across the board. Personal income, they were expecting 0.4%. It was 0.8%. So in other words, these fiscal decisions, tariffs and downsizing of the government in a way that's, AI driven maybe, rather than, driven by whatever fiscal decisions are going on, these extreme decisions, they're now more than just talk or hip. They're actually affecting economic numbers, right? And so, but I wanted to show you Tuesday. So there's a report that comes out once a month, and here in the States, our biggest, besides services, we've been a services economy for over 25 years. But the other thing is just, we're a retail economy, right? There's a lot of buying and selling that happens here. And so I pay attention to consumer confidence. And this is the consumer confidence for March. And first of all, sure, February was revised up. Can you see that number, 100.1 versus what we reported last month of 98.3? But I want you to notice that this month, we were well below expectations, 94.2. We're at 92.9. 92.9 versus last month's 100.1 is a big drop. And I've been watching consumer confidence for almost 30 years. And when consumer confidence, usually that number is between 100 and 110. That's normal. And I would say it's there almost. The only times I've seen it dip below, say, 100 or even 99 at the extreme was 2008 recession, maybe .com bust in 2001, and pandemic, right? So to see it drop to 92.9, and it's not anything that when you look at the dot-com bust, you look at it wasn't decisions made. It was actually, reaction. It was, the dot-com bust. The economies around the world broke down in 2008. And the same thing with the pandemic. I mean, but to see it drop to 92.9 and not even go like 100, 98, 96, 95 too, but go from 100 down to 92.9. I mean, that kind of shenanigans. I mean, I'm ringing alarm bells this week, Sip.
Yeah, it's like the first 2 months of the new administration getting a lot of these things in place. End of February, starting to enforce it. March here, starting to see the pros and cons and the feedback, the consumer feedback from this. I mean, I was looking at the auto tariffs, and I mean, the numbers there were pretty significant. So, and that's just one industry that could definitely spill over, trickle down into the other consumer markets.
Now, I do have to say, and this is for our viewers, right? This is short term, right? Everything is short term. I can't forecast what's happening in the medium to long term. And, our administration is saying that we're going to do some extreme stuff and there might be some short term discomfort. So basically, the administration is doing a gamble on a philosophy that really hasn't been tried this extremely and this quickly ever before. So it's a big gamble and it may pay off, right? That's kind of what this administration is going on. They said, you elected us to do some extreme change. We're doing this gamble. You wanted to not have same anymore. So my fingers are crossed that their predictions are going to be correct and that things turn around as fast as they've gone down. But it is a gamble, and all the economists and even investors are worried because nothing like this has been done at this speed in the past. So it's a gamble without any certainty or being able to predict what's really going to happen.
I do have a question on that because I keep seeing comparisons to the Reagan administration where we kind of took a hit and then they kept saying that we had, a roaring economy afterwards. And that's what the Trump administration is doing. Do you see comparisons? I was too young to really know the effects. But have you heard that comparison?
Yeah, I have. I was 14 years old when that happened. So that was 1987. So I was, in my civics class in high school, freshman, and kind of analyzing this at that time, not really knowing that I'd be where I am in my 50s talking about this stuff on a podcast, but instead just being a student of it. And back then there was in the Wall Street and investment world a lot of uncertainty, and but it was different. It was swayed, a lot towards the little guy. Basically, what they did is they revised the income tax code and took out a whole bunch of things that would benefit people that make a lot of income and kind of, made it a little bit more fair across the board. This is kind of This is kind of the opposite of what's happening right now. So it's going to be very interesting to see how it plays out. There are parallels, but I think there's also, the philosophies are a little bit different. One other thing that I think might be beneficial for our users, I know that a lot of our folks are kind of scrappy like I am. I foresee that a lot of new stuff is going to come under scrutiny and go up in price. If you're in the world where you have some vehicles that you've been thinking about selling on the used car market, or if you're one of those people who buy stuff and then refurbishes it and flips it, I think you're going to be in a pole position here, because I think that the used market for everything, whether it be furniture or cars, or, if you're thinking of downsizing and selling your house, I think you're going to be in a great position in this short duration. This might be the year where you want to finally, dress up that bureau and sell it on Facebook Marketplace, because I think you're going to get top dollar. If you have a used car in the garage I think this is the year, man, because nobody's going to want to buy new. Prices are going to be too high, and it's not going to be worth it.
Yeah, well, I'm looking at some of this camera equipment I got, and I'm like, hey, maybe we hit up the Facebook Marketplace. I did see 2 tweets today that I thought were interesting that I'd love your feedback on, because we get the economic news that comes out, but there's pieces of data that hit the market regularly that sometimes tie into that economic news. This one's coming out from Charlie Bilello, which I don't know if I'm saying that right, but he does a ton of great data tweets, basically saying the median household income necessary to purchase the median price home for sale in the U.S. is now 57% higher than the current median household income, and that's the biggest gap in history. The last recession was driven by the over leveraging of the housing market. Could this be a break of some sort where the unaffordability of the housing market could have some spillover effect?
Yeah. Oh, absolutely. There's we've made the wrong decisions as a country for maybe 25 years, right? We were forcing people to get higher educations and not build houses, white collar over blue collar, all of that good stuff, searching for the better life. And we wound up in a situation where now we have an undersupply of houses, which has driven prices up. We've now got a issue around people's, median income. We haven't been working at, boosting people's income. So now nobody's going to be able to afford the houses that are there. I dare to say it, but this is usually, if you look in history, the beginnings of the fall of an empire. So we'll see what happens. Last time something like this happened, there needs to be something where it brings people together. Right now, people are so divided that nothing can get accomplished. But if there's something that happens in the not too distant future that can bring everybody together towards a common goal, I mean, you almost wish that you had the Soviet Union versus United States again, because everybody was focused. Even if the Soviet Union really wasn't that bad, everybody was focused on, oh, it's us versus them. But then, come the end of the 80s and the bring down the wall, there was nobody for us to focus on. So we started to focus on each other. And that's what's happened 30 years later.
It's crazy that you mentioned that, because the last time I felt that was when we played Canada in a hockey game. I was like, oh yeah, America, yeah, come here, let me hug you, America,
Yeah.
Bring us together. The other
I gotta say, it sure is bringing the Canadians together. The Canadians have not had this much unity. I lived in Canada from 1998 to 2000. I lived in the French province of Quebec, and there's definitely, 100-year animosity between the French and the English in Canada, to the point where even those folks in British Columbia who they're like, you go in their subway stops and you see, of course, French and English, but then you see Mandarin and Cantonese, and they're like, I don't even know what those people on the East Coast are arguing about. You're seeing those folks come together under the Canadian thing. And look at the people in Greenland, the most peaceful place on earth, and they're coming together. So if anything, the decisions we're making is causing unity around the world, if anything, against us.
Yeah, the other tweet was similar to the housing one, and that was the percentage of borrowers of the last 2 months late on their car payments has reached an all-time high, which is kind of that over leveraging of the auto industry that I know we've talked about a few times, that could start to decouple. This is not a good, especially with all the tariffs and stuff coming into play. I would hate to have a foreign car, a Mercedes Benz, that is way overpriced in this day and age. But I think this just kind of hits on the, there's some signs in the economy of slowness that are trickling into the news, which is causing the market to fall a little bit today. And we're here to find some opportunities, specifically with some option strategies. So
we can definitely trade this, and everybody, by the way, needs to get that VIX trade in place. But didn't mean to interrupt you. Go ahead, man.
Yeah, and we have 2 or 3 videos on that VIX trade on our YouTube. So if you want to head on over there and check it out, AJ did kind of break it down a couple minutes ago. So if you want to just review that. Otherwise, if you're new to the show, I see we got some new viewers today. Head on over to that quick links page. This is going to give you all the goodies from AJ and the Trading Trader community, whether it's the free indicator, some of our social channels, AJ's free daily workshop, some information about coaching, and just the Trading Trainer community. AJ often refers to his Thursday night session with the team, where they they go through names, opportunities, what they like, what they don't like. They discuss. Every once in a while, AJ brings one of those onto the show. So we are going to take a break. There's a lot going on in the market. We're seeing some good short side opportunities. And if you're not taking advantage of them, well, maybe we've got some names and some opportunities for you. So sit tight. We're going to take a break. We'll be back. We are streaming live. So if you have a question that you want AJ to run through, throw it in the chat. Otherwise, we'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. I looked at your hot list today and I was like, oh, I know every one of these companies. So that's a good start to the day. So AJ, your pick of the week for this week is a name that we throw into the boring category, but it seems like a name that you have enjoyed following for quite some time, and that is Cleveland Cliffs, ticker symbol CLF. What are you seeing here?
I'm seeing an opportunity to, double my money on this investment about once every 3 or 4 months. That's what I'm seeing. And I'm seeing an opportunity once I really identify a clear bottom. I'm seeing an opportunity to get in on some more Cleveland Cliffs. This is at a great price, by the way. We're currently trading just south of $9 a share. So I am waiting, Sip, and I'm using my indicator here. In fact, let me just go over one more time. This is my fast MACD indicator. You can use the MACD on your own system. My fast MACD indicator that you can download for Thinkorswim, if you go to our quick links page, will show you these really nice arrows, right? And also mine has one thing that most of the boxed indicators don't, and that is you can calculate it on different prices. The traditional one is calculated on close. I actually like to calculate mine on the volume weighted average price. And just as a review, the fast MACD is 6, 19, and 3 versus the standard, which is 12, 26, and 9. So let's go ahead and clock that in and see what it tells us. So yeah, I'm going to wait for my light blue arrow, and I'm going to wait for that to come. end of day. So I'm not going to look at it during the day. I'm going to wait until the end of the day after the session's closed. And if I have a light blue arrow, the next trading day, I'm going to look for an opportunity to get in. And if I don't get in, like you can see, we get these light blue arrows and then don't seem to get any of the what's necessary. It's called follow through. We don't get to seem to get that follow through on the signal, and then the signal reverses on us with this purple. So I want a light blue arrow with follow through. If you got in over here on March 14th, just hold your horses or add to your position when we get the next one. If you didn't get in on March 14th, you can get in at the next one. And you can either get in with Cleveland Cliffs by buying stock. It's not that expensive, and I would buy it in lots of 100 shares. But the other thing you can do is the Cleveland Cliffs January Leap. So this is the one that expires in January 2026. The $5 call. I know that I wrote in the notes 55. That was a typo. $5 call. It's about half the price of the stock. So you could buy a contract or however many, you can afford for the risk of that substitute option. But that's what I would do when I get that bottom with follow through. I would buy either the stock or the option. And then basically what you're doing, Sip, is you're waiting for the next top. And that's when you either consider, selling or you sell your premium trade. And we talk about that a lot here. You sell your premium trade, you buy your protective put, and then you allow time to work. And Cleveland Cliffs is one of those symbols where you can buy the stock or buy the substitute option and then sell premium for like 5, 6, 7, 8 months down in the future. And if you're just selling premium, you can expect this position to double probably once every 4 or 5 months. And so I'm setting myself up again with Cleveland Cliffs to move forward. And Cleveland Cliffs is going to be one of those companies that kind of, no matter what happens with the most of the market, Cleveland Cliffs is going to keep going in our range-bound sideways strategy. So I'm eyeing these type of companies to keep me going through all this uncertainty.
Yeah, and it seems as if they could be the benefactor of some of these tariffs because
Yes.
they're very much promoting the, Buy American Automotive and U.S. Steel and things like that. I mean, it seems
Absolutely.
as if their executive team is all over the financial news talking about it. So double, bonus there in that you got some of the technicals, and seems as if the fundamental shift in policy could benefit them. So AJ like Cleveland Cliffs. We like it just because it does tend to fit in that range. But long term, this could have some upside with a very nice price point of what, $9 right now. So
it's at a bargain basement price. But again, don't pull the trigger till you see the whites of their eyes. In other words, make sure you get that bottom signal that is confirmed with next day follow through. Don't go buying this today. We haven't gotten a clear bottom signal yet.
All right, Cleveland Cliffs, AJ's pick of the week. We've got a couple other names from users, fans all across the world. Starting in the financial sector, AJ, Sean from New York City wants to know your take on Citigroup, ticker symbol C, a name we've looked at a handful of times over the podcast.
Yeah. Okay. So Citigroup Citigroup's one of the biggest of the banks. So that's kind of nice. They're on that list of too big to fail. I see that Citigroup's going to be very responsive to what's happening in the investor world, in the economic world. They hit a bottom. So, and I feel really good about this bottom. Their bottom is at $68. But then again, if we start to hit recessionary territory, let's watch $68 as a bottom. That seems to be very tested. And I would say, I see why you brought this up today. This is Sean. Sean, you're thinking of shorting Citigroup. I don't know if I would short Citigroup right now. I would instead wait to see what $68 holds for us. If we start to go below $68, where we have this is kind of an interesting term. This is called a rising window, right? And so this would be a falling window. If we dip below this gap that occurred here on the dividend back in November, then maybe I would consider shorting Citigroup. But right now, I want to see whether this $68 holds. And if there's a reversal at $68, like there was mid-March, I might actually think about, either going long Citigroup if you can afford it, or even doing a vertical spread, maybe in the bull direction. Again, that $68, whether that holds or not, is going to tell me something. I wouldn't do anything right now. If you short right now and then $68 holds, I mean, it might be difficult for you to get out at a break even. So I'd say hold off. Let's see what happens in the, as we approach 68. That's my magic number.
All right. Citigroup pullback, but AJ isn't convinced that there's legs. So hopefully that's helpful, Sean. Moving on to our next game, or our next name request. This is Carl from Lincoln, Nebraska, interested in the Cheesecake Factory, ticker symbol CAKE, or CAKE, cake, ticker symbol cake.
Yeah. So, this is interesting. Yeah, it is a similar setup. And again, boy, these levels of support are so firm. I'm seeing this one at $46. So I'm going to say the same thing. I see that, you think you might want to short this right now. I'm going to say, let's see how $46 holds. Citigroup, Cheesecake, these are like American names, right? One in the banking industry, this one's in the restaurant industry. I almost feel like, let's see whether $46 holds. If $46 holds, again, whether you're buying stock, whether you're buying a substitute option, or whether you're doing a vertical spread in the bull direction, that might be the play for the medium, even short term. However, if we dip below $46, then maybe we start thinking about, shorting a play like Cheesecake Factory. But man, these are the type of names, Citigroup and Cheesecake, that are going to probably get us through these kind of economic downturns. They're kind of boring stocks. One's in the finance, one's in restaurants, but they're going to stay, right? They're companies that work no matter what the economy's doing. So yeah, I'm okay with holding off on shorting Cheesecake. Let's see how 46 holds out.
All right. I would imagine that if pockets are hurting, less people are going to the Cheesecake Factory. That's just my take on it. But
let's see how $46 holds. But yeah, I see where you're going with that. But I almost feel like, Cheesecake Factory would be the one that wins versus the more expensive, like mom and pop restaurants that are like really high end. I feel like those high end people will start going and having their birthdays at Cheesecake Factory.
I know it's not a publicly traded company, but Hooters is on the verge of bankruptcy. I keep seeing. So, maybe
I'm trying to think if Twisted Kilt or Tilted Kilt is even around anymore. I think they were also in that kind of unique restaurant genre.
No names, none of those near me, so I haven't seen Twisted Kilt in a while. But thank you for that, Carl. There's your breakdown for Cheesecake Factory. Our third name in our speed round is Doug from San Diego, California, interested in Rivian, ticker symbol RIVN, a name that's in the news. Rather, I think they just announced a spinoff of some sort.
Did they? I don't know. All I know is their big rival is in trouble, right? I'm talking about Tesla. for news headline reasons. Man, Tesla is taking a beating both in news headlines and in their stock, although they have some up days here and there from bargain buying. But yep, there's a huge backlash against Tesla, mainly because of Elon Musk. And even I've read that there's pushes in the board of Tesla that maybe they want to see if they can get, but he's he like Zuckerberg with Meta is a controlling owner of Tesla, so you can't really evacuate him. Okay, so that means that by default, all those people who are buying Teslas are now interested in Rivians. So I see it. We're trading at $12. What'd you find out? Did something happen?
They are spinning off to make lightweight electronic vehicles. So some sort of new branch to, I don't know the details, but that was a big news headline this week, is that they're creating some new segmented division, or completely, spinning it off from the brand, which probably is good in the long run, because that's what Tesla's doing with the robots, and it's just not spinning it off. They're just creating different products.
You know what I like about Rivian? Because, you follow them and they're scrappy, man. They have their base vehicles. I'm seeing them all around. I don't know what's happening in LA, but here in DC, there's a lot of people driving the Rivians. But in addition, you hear about them talking to Volkswagen. You hear about them talking to Apple. You hear about them, making all these different. I even heard that there might be something with Waymo. By the way, I know you've got Waymo in LA. We just got notice that Waymo is going to come here to Washington, D.C. That's pretty cool. All right.
Everywhere, AJ, everywhere. Like 3 o'clock in the morning, like 8 of them, just like, putting in the work.
I think that's so cool. I was looking at because the Waymo is built on LiDAR sensors, and I'm a follower. I don't know. Do you watch Mark Rober, the guy, the YouTube guy who's kind of a science nerd?
Probably seen some clips.
Yeah, he's the one who always has he makes obstacle courses for squirrels and fills pools with those gelatin balls. And anyway, he just did a video less than 2 weeks ago where he was testing the self-driving of the Waymo versus the Tesla, and the Tesla totally mowed down all the people. And so that was interesting because of this thing called a LiDAR sensor. So of course, then I got, I'm on a tangent here, but I got curious about my Lightning, right? Because I don't know how my Lightning drives itself. I just know that even with one eye, I can get on the highway. And I probably shouldn't be putting this on a public podcast, but I can let the Lightning drive itself down the highway, and I feel confident. But I was wondering about, the sensors, and I found out that my Ford Lightning, they have a patent for the next generation of Lightning to put LiDAR sensors like the Waymo into the headlights. But my version is still using just cameras and radar. And that makes sense because when I want the self-driving the most, which is either when it's raining out or when the sun is at that perfect level where you get blinded, right during rush hour, that's when I want it to drive, and that's when it disengages. So that's how it's using cameras instead of LiDAR. So yeah, okay. I don't know how I got on that whole topic, but Rivian, let's look at the charts. All right. I see the bottom, and I think this is why you're contributing. You're wondering if we're approaching $13, $14. You're probably saying, hey, that's been tested resistance in the past. Should I consider shorting Rivian? I don't know. See, Rivian is one that I actually am starting to accumulate in my portfolio as a long-term hold. So I'm almost resistant to tell you to short it just because maybe it's against one of my positions. But yeah, so if it approaches 14 and it gives us one of these magenta arrows, which basically means it's a fast MACD crossing to the downside, and we get follow through like we did on February 24th, sure, maybe do a short-term play where you short some Rivian, and then once it hits the bottom where it looks like it's been bottoming out, well, it hit a new bottom at $10.50. Maybe that's when you sell some put premium and buy a protective call. And if it goes below 10.50, which it doesn't look like it has in the last, well, 3 months. Let's go to or maybe that's a 6-month chart. Let's go to a 1-year chart. Yeah. I would put my bottom at 10. If I start to go below 10, I would look to, buy to close my shorted position and take my money and run. But if it stops at 10 and starts to go back up, that's when I would sell my premium, sell my put premium, buy my protective call. We've been talking a lot about those type of trades where you sell put premium instead of call premium in our program. And I could see where you're set up for that. So, yeah, back in summary here, let's short Rivian if it, gives us a reversal somewhere between $13 and $14. Otherwise, in the long term, I might, if you have some money that's for a speculative buy and hold, you might consider buying Rivian. I think that they're a good company that you might want to have in your portfolio for the long term.
All right, Rivian, and probably maybe a benefactor of the Tesla hate recently because they're like, oh, we don't even know who runs this company, but they're electric and they're helping the environment and they're not meddling with my Medicare or my education, system. I still, every time I see a Rivian like in the parking lot, I still look at it and think to myself, that's a damn good looking car. Like the trucks are nice. So if the fundamentals could kind of work themselves out, this could be, a Tesla 2.0, maybe some capacity.
Yeah. Absolutely. I think that a lot, especially, I don't know, EVs are having a hard time. When I worked at HP, there was a book that we read called Crossing the Chasm. It was like required reading. It was how to get early adopters, how to get, past just having early adopters interested in your product and instead get the mainstream, right? We have yet to have mainstream, besides in the big cities, get the mainstream people in North America to buy into EVs. But I think that, and so you've got this whole group of early adopters that, may not be interested in Teslas anymore for the reasons you mentioned. And so where are they going to turn their attention? So I think Rivian has a great opportunity to get those early adopters, especially now that a lot of Teslas are to the point where not only is there maybe a sour sentiment towards them, but also they're coming up on 5-10 years old. And so people are starting to, look for their next car. And so I think Rivian, most of Rivian is produced here. So they may not, at least on the main level, have a tariff issue, maybe for buying parts. Tesla, I noticed, issued on X that they're going to be affected by tariffs because the components they buy come from overseas. But and I'm sure Rivian does too. But when you're already manufactured here, I think you're going to be in a good place. So yeah, I think Rivian has the underpinnings, and I think they're scrappy enough, having, followed some of their inside dealings. I think they're scrappy enough that they're trying different avenues to cross the chasm to the mainstream over the next 3 or 4 years. That's why I'm loading up on them in my portfolio. So take that for what it's worth. It is my speculative money. You've always got a little bit of money that you play towards speculative, and mine's a lot of it's in Rivian.
The other EV news this week was that Donald Trump pardoned the former Nikola CEO who was arrested for fraud, and Nikola was like that third or fourth player with the EV trucks and stuff that just went on a whirlwind, and then I think went completely bankrupt, and the guy got in trouble. So a lot of EV news in the headlines this week. So thank you for that, Doug.
I mean, here's the scoop. You go back about 4 years and you saw all this infrastructure money, right? And you saw this money, billions of dollars going to things like EV chargers, right? Supposedly EV chargers. And then a whole bunch of billions of dollars going to even like rural internet. And now you come to, you can see why people are pissed off, because 4 years later, how many EV chargers were actually made with all that billions of dollars versus how much of that money was spent in like law, on lawyers, trying to make everybody happy, and how many people actually got rural internet, right? With all that billions of dollars, like 22 people. Right. And so you could see why people are pissed off. They're like, I'm putting all this tax dollars in, and you're promising all this stuff, and you're spending all this gosh darn money, and it just disappears and there's no results. So you can see why people wanted change. But I'm just where the question is did they really want this extreme of change? And we'll find out, because we voted for it. Right. So
yeah, and I personally don't get all the Elon hate, because when he talks about why they cut certain things, it's very logical, and it's just like, oh, you want, like, just yesterday he did the interview where they were like, oh, we found one where we spent $1 billion on a 10-question survey that we could have spent $10,000 on SurveyMonkey, and it's like, yeah. Who was the guy in charge that was like, let's not use a SurveyMonkey to do this. Let's do the consultants and this and that. And it's case by case by case. But the thing with Elon that I do appreciate is he builds stuff. He builds factories. He builds products. And so if somehow we could harness that to the American good, then we can get back to building more stuff and putting that money to use. I mean, that's the biggest disappointment, is just like it wasn't even allocated correctly. My whole life, and this is one of my pet peeves, and I follow a gentleman who's been quite critical of government spending. His name is Ezra Klein. But my whole life we've been talking about high-speed rail, right? Because when I was a little kid, they were making the Eurail, which is now all over. You can go from like Italy to Germany in like 2 hours on this high-speed train. So they've been talking about it for like 30 years, 40 years since I was a kid. There in California, where you are, supposedly they were going to build one that goes from LA to San Francisco in 2 hours. That was something that I think Obama, like 15 or 20 years ago, was talking about. And I think there's maybe a section of it. It doesn't have any trains on it, but a section like in the middle of nowhere between Bakersfield and Fresno or something. And it's just over budget. And during this time where we've spent billions of dollars, like China has put in 23,000 miles of high-speed rail. And so you're like, dude, so I get it. I get why people are wanting change, but we'll just see how this experiment plays out. Yeah, and try and find winning opportunities on the way. Let's go ahead and pull up your quick links page again. For anybody new to the show, interested in following along a little bit more hands-on, head on over to this quick links page. We've got a ton of goodies. We've got the free indicator suite where you could access the free options lookup tool, which is being continually updated, and there's going to be some exciting updates to that in the next couple of weeks, so keep an eye on that. And then showing some love on the socials. Head on over there, hit that like, hit that follow, hit that subscribe button. We're keeping an eye on this market continuing to drop here into Friday. AJ, heading into next week, what are your thoughts? What do you, I mean, are you just going to continue to look for an opportunity to maybe, if we break to the downside, take advantage of that?
Yeah, that's exactly what I'm doing. Yeah, you hit the hammer, the nail right on the head. I'm definitely watching, and I'm going to give this number again: $5,521.52. I'm watching for an end of day close below that, and boy, we are dropping like a rock today. We're already at what, $5,602.75, something like that. So I'm watching that 5521 number, and that's going to be where I jump on board and start swing trading to the downside. I start doing some trend followers to the downside, but I'm still also looking for sectors that are going to still go sideways. For those people watching the show, check out oils, energy that is traditional energy, not renewables. And check out things like U.S. Steel, Cleveland Cliffs, anything that is a solid play that has to keep going, like a Conagra Foods. Let's look at all those type of companies for our premium selling. But get ready. We don't often get into mature downtrends, and so if we do jump into one early next week, dust off those strategies that we only use once every 10 years, because I think they're going to come into play.
Awesome. Well, AJ, thank you for your time. Thank you to everyone for tuning in. Episode 177. Exciting Friday. Hopefully you're taking advantage of it. If not, you're looking for opportunities. We appreciate it. Feel free to show some love. Hit that follow. Hit that subscribe. Tell your grandma. Tell your friends. Come back next week. We do appreciate it. If you have any questions, feel free to throw it in the comments. Send us a DM. Head on over to tradingtrainer.com to get some more information. Otherwise, stay safe, everyone. Have a good weekend, and we'll catch you guys next week.
On the flip side. Bye, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.